You're watching Stock Watch this week. I'm Ndawuleng Lechela, and joining me to unpack your stock-related questions today via Zoom is Chantal Marx from FNB Wealth and Investments and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Chantal, Rowan, thanks so much for joining us this afternoon. So Chantal, I read an article today and the headline was "Global Markets Appear Numb to Trump's Reciprocal Tariffs." And that really seems to be the case across the board for most parts of the week. I did see that European markets and the local markets slightly under pressure today. But what have you made of trade this week? We've even had fresh tariff threats on the pharmaceutical sector and chips sector, but not making much of an impact on market performance.
Yeah, so I think that investors are focusing on what they can control.
Yeah.
What they can't control is Trump. They can't control the tariff situation, and they also are struggling to interpret what it might mean for markets going forward. So the focus has now really shifted to the data coming through from the US economy. We had some really dramatic jobs data revisions indicating that the jobs market there is under pressure. So the prospect of interest rate cuts really spurring on the equity market. And then the other thing, the AI structural wave that we've been seeing. So a lot of the gains actually centered around the technology sector, because I think investors feel like they've got a grip on it, because AI is going to happen whether the tariffs are kind of implemented or thrown about or threatened or not.
And there are questions around the tech sector. We'll get into that in a bit. Rowan, a company that's been spared from the chips tariffs is Apple. This after it announced a $100 billion investment to make US iPhone or devices parts. How are you reading this? There seems to be, there was a back and forth between both Trump and Apple on the back of where Apple assembles its iPhones. Could we read this as those iPhones still being assembled in India and China, but there will be some components that will be made in the US?
Yeah, that does seem to be the case. So, I mean, we are seeing quite a fluid sort of valuation environment. Apple, which is a mega cap stock, is their price up 8% in 2 sessions. And as you mentioned, off the back of some of those concessions and being excluded from, the chip tariffs. So I think what you're seeing is, and this has been a hallmark of the Trump administration and sort of the tariff strategy, it's sort of been a negotiating tactic and transactional to extract concessions from companies that may be impacted. And I guess Apple, is I mentioned a major tech stock and a tech leader and a major US company. So obviously it could be quite damaging, I guess, to US reputation, US markets, if it was hit hard by the tariffs. So I guess this is a way of sort of implementing the tariffs, but still not harming, I guess, US interests in the form of Apple and Apple shareholders. So yes, Apple agreeing to invest a further $100 billion in the US markets, and it looks like that the screens that are on the iPhones will be made in Kentucky, so that concession seems to sort of have helped them dodge the tariffs for now. So I think you're going to continue to see this sort of as a trend where concessions are made and sort of the ultimate outcome is less damaging, particularly for US companies and US interests.
Yeah, and sticking with those tech counters, most of the Mag 7 companies have released their second quarter numbers. I think we're left with NVIDIA, that's out late this month. A viewer here asking, which one are you betting on, particularly zooming in on the one winning the cloud AI race? So I guess Amazon versus Microsoft versus Alphabet, Chantal.
So I think the best thing to do here is to kind of hedge your bet by taking positions in all of these companies, because they really do have different value sets and they have different areas of focus. I think one thing that Alphabet showed us in their latest set of results is that Google search is not dead, right? It's still let's Google it. It's not let's chat GTP it. Although I think a lot of people around me are starting to say let's Copilot it, or I'm going to chat to Copilot about it. So each of these companies have a different focus for their AI strategy. Meta really attached to the social media side of things, Alphabet attached to search, and Microsoft attached to kind of workflows and enterprise. And all of these companies have a cloud offering, with the exception of Meta, but that's where Amazon becomes quite interesting as well. One of the reasons Amazon's share price was down 8.5% on results was because its cloud kind of revenue beat expectations, but the growth was slower than the rest of the competitors. But I won't read too much into it, because the absolute movement was still bigger, because they're the leader in that space. So I would actually have, if I take those 4 companies, I'd probably have exposure to all 4 of them.
And what's your top pick from those counters then, Rowan? Or would you, just like Chantal, just spread out your exposure to them?
No, so I think they are all interesting companies, and they're very well positioned, as Chantal has outlined. I think we're quite valuation focused, though, and we mentioned this previously. Alphabet, just on a relative basis to the other counters, looks more reasonably valued. And I agree that the relevance of Google search and a lot of the other services that they offer beyond that remain completely relevant to consumers and companies in this environment. So they have a very strong market position and a number of strong properties, and sort of a PE of sub 20, I think, with a lot of potential growth. That is our preferred pick, and it's largely on valuation grounds. I think they're all very strong businesses, so that would rise to the top for us.
And whenever we talk about AI, it seems like we leave out Apple. What's going on there? What have you made of their AI strategy, or lack of AI strategy? Where is it when it comes to the AI race? I mean, when I do read reports and articles, a number of analysts say that it's right at the back of the line. Chantal, your thoughts on that?
Yeah, I think it's actually something that they've been struggling with as a business as well. That's why they're losing top talent in their AI teams, and that's why they're lagging behind in terms of rolling out these specific solutions. They're not sure where they actually should be going with AI. Obviously, there is the Siri angle. They've been delayed in terms of rolling out new Siri, and they can probably better that quite substantially. Anyone with an iPhone would know that it really isn't that helpful. So, or maybe I'm not using it correctly, but it's not intuitive, right? And it's not that helpful. So there can definitely be some gains there. But what we saw from Apple's last set of results was also quite telling. This company is a hardware leader, and they have a captured audience. And I think that that's where most of the focus for investors should be. With Apple, I don't think you have to focus too much on the AI story. Let's focus on the hardware, and let's focus on the services side of the business, where I think AI will kind of naturally filter in. I don't think they have to have anything crazy related to AI in order to make it an investable, interesting, or long-term growth stock. I think what they have is good enough.
Moving right along, a question on Disney. I think it was also out with results earlier this week. Streaming and parks upbeat, but the film studio and, of course, the traditional entertainment TV segment not doing so well. Viewer asking for your analysis on the company, saying they don't see much growth for Disney apart from Disney Plus, but highlighting that streaming is a very competitive space. Rowan?
Yeah, so I think there's been concern about the health of the U.S. consumer, and that's sort of been weighing on the consumer-focusing stocks, including Disney. It actually looks like their results were decent. They obviously do a lot more besides the streaming, and particularly, they said the bright spot in their results was actually what they call experiences, which includes the theme parks and actually cruises as well. So, and they sort of speak, I guess, more to the upper middle income consumer in the US, and they're not seeing any softness there. So I think overall they're quite a diversified business across the entertainment sort of value chain. And so they're also doing a lot in the ESPN space and restructuring with the NFL there. So I think they're thinking hard about streaming and how that impacts their business. But overall, I think you're getting exposure to the US consumer, and that does seem quite healthy. So it does actually look fairly good here. It's sort of been, the share's been a little bit lackluster, but you're obviously getting exposure to all those entertainment properties, and it should be a bellwether. So it's kind of a punt on, I say, the health of the US consumer.
Yeah. And Chantal, how are you playing that that streaming industry? Would you go for a Netflix? I mean, there's Amazon through Amazon Prime. There's also Apple through Apple TV, or even Disney.
Yeah, I mean, so let me start by saying I wouldn't view Disney as a streaming kind of play at all. It's kind of a side hustle for Disney, even though it's driving a lot of their growth.
Yeah.
The value in Disney lies in its intellectual property and its IP, and the fact that it can take Frozen and achieve a return on investment of 9.9 times. So that's 990% return on investment on the Frozen franchise. That's where the value there lies. In terms of streaming, I'll go for the leader. So I think Netflix is way ahead of the competition in terms of original content generation and being quite embedded in people's lives. So Netflix is definitely the player there. Is it cheap? No, but I would definitely look for an entry point. I'll keep monitoring the stock. It'll be on my watch list if it's not something that I don't own already.
I mean, we even have a phrase, Netflix and chill, okay? Let's move over to some local company news. What is your view of buying Remgro now for a 2 to 3 year period, Rowan?
Yeah, so Remgro traditionally has been a South African industrial bellwether. They have recently transformed their portfolio in terms of less listed counters and more unlisted businesses, which I guess is an attempt to make Remgro more attractive, sort of as an investment holding company, getting access to companies that you couldn't get access to, just through other listed entry points, for example, Mediclinic or Distal, which they recently delisted. So I think it actually is an interesting entry point here. The discount to NAV has been wide. I think management's doing a lot to try to address that, and will continue to hone the portfolio, unbundle small parts like eMedia Holdings that is coming out of it. And you do get exposure to the broad sort of South African economy, which the valuations are fairly low, and you're getting a discount on top of that by buying Remgro. And I think the outlook is good for the next 2 to 3 years. So that is the kind of time frame I think that you need to look at.
Yeah.
I think it will be a dependable sort of return compounder, not too volatile, with some sort of interesting optionality as they unbundle some of the assets, which you then will pick up and you can choose to keep or realize as part of your overall investment.
All right, let's hit pause on the conversation. We're heading to a short break. Keep those questions coming via email to stockwatch@bdtv.co.za, via SMS on 41392, or on X at Business Day TV using the hashtag Stockwatch. We'll get to them right after this. Welcome back. Still with me via Zoom is Chantal Marx from FNB Wealth and Investments and Rowan Williams from Nitrogen Fund Managers. And Chantal, let's kick things off with you. We were just talking about Remgro, exposure to Heineken, exposure to Mediclinic. Is this one to hold for the short to medium term?
Yeah, I do think so, particularly if you're already in the stock. Well, even as a buyer, it's trading at a pretty deep discount to its net asset value. There's some interesting stuff in there. There's been a lot of movement in that portfolio more recently. RCL unbundling Rainbow. As Rowan also mentioned, you've had the eMedia unbundling coming through, CIVH and Vodacom tying up their fiber businesses. So I feel like the portfolio is being managed at the moment. Probably the last 3 or 4 years, it's being managed. And I think that's a good thing, and it can result in an uptick in shareholder returns, whether that be via receiving stocks or them just growing the portfolio over time. And I mean, in terms of reform, we do have some momentum going on in South Africa. I can see a scenario where growth picks up medium term, and then Remgro is a nice play on that.
All right, with, Chantal seeing that momentum and possibly more growth for the local economy, let's then chat about the retail sector, the clothing retail sector in particular. TFG out with an update yesterday. Sales quite muted. Markets didn't like that update. I think at one point it was down 7%, closing about 5% lower. Is this one you want to have exposure to at this point, even though there is some sort of uncertainty around our growth prospects? Rowan.
Look, yeah, I mean, in terms, for Fini's, it was quite a busy period because they basically aligned the update with the Capital Markets Day. It was a 2-day Capital Markets Day that they had in Cape Town. So I think it was a combination, as you said, of sort of the market being underwhelmed by those sales figures, which excluding the White Stuff acquisition, which was a large UK acquisition, were quite underwhelming and just points to continued consumer pressure. And yes, the sort of muted volume and sales growth across the board. They had to pull the credit lever to some extent, and then exacerbated, I think, by what were quite aggressive and ambitious growth targets over the next 2 years in terms of space growth and expected top-line growth as well. Which may come at the expense of margins in the short term. And I think the market just feels they've done a lot. They've made quite a few acquisitions, and now they're going to expand. They would like to see, obviously, some delivery against that. And I think the market pretty spooked by that. I mean, what we are seeing is generally the South African retailers have been under pressure, have significantly underperformed the market this year, which just points to the consumer-led sort of growth, that really being stalled. So we've seen the overall markets perform well, but certain sectors underperform, and obviously economic growth numbers and forecasts have been rolled back this year. And so it's still sort of a wait and see in terms of delivery. So it does look like pressure on the consumer is easing, but that's not translating in the short term into increased sales.
And that was going to be my next question to you then, Chantal. I mean, you look at retail sales figures, they've been upbeat for the past few months, and they've been a few months that have pointed to clothing and footwear being some of the, or one of the most positive contributors. Why are we not seeing it playing out when it comes to the local retailers? Is it on the back of perhaps a retailer maybe not necessarily shopping at these big retail stores, or are we also just seeing competition coming through? Perhaps retailers are not are shopping with the online players, the likes of Shein.
No, I think when we're looking at retail sales numbers, it's very far backwards, right? We only get it about a month and a half afterwards. And if you look at both Mr. Price and TFG, the weakness came through in June. So I think June is going to be the interesting one to watch. And we haven't had retail sales numbers, I think, for June yet. But it's a base impact as well. So the school holidays, it's incredible that this impacts South African retailers to this extent. But the school holidays were 2 weeks later, falling exclusively in July. So suddenly you have 2 weeks where people were last year walking the mall and shopping that they weren't necessarily doing this year. So that had a huge impact on June sales. And if you look at the July figures, both for TFG and Mr. Price, it actually looked quite strong again. So I think that we need to think about the seasonality around it as well. I thought that the market reaction to TFG's numbers and outlook yesterday was completely outsized. I mean, if you think about the valuation as well, it's really cheap. It's trading on a forward P below 10 times, with the prospect of kind of low double-digit to mid-double-digit earnings growth over the next 3 to 5 years. So, yeah, I mean, I just thought it was a complete overreaction. And I'm not only saying that because it was my stock pick on Stockwatch on Monday, very unfortunate timing, but I stand by it. If you're a longer-term investor, then this is a really good entry point for TFG in particular, and probably for Mr. Price as well.
I know you've chosen Mr. Price and TFG as your stock picks quite a few times before. We have a question here, Chantal, on a small cap player. We were talking about it during the break. The viewer just asking, or rather saying that they've been noticing director purchases of the stock, but it's been stalled at 2 rand. Basically just asking what's happening there. Should they be concerned?
Yeah, I mean, so I'm not very close to Bunani because we're talking about Bunani, right?
Yes.
I'm not very close to the stock, and I don't really monitor the business that closely. But I have also seen over the last 2 weeks that its CEO Ethan Dube has been buying small amounts of stock almost every single day, and I'm talking about 2,000 rand here, 2,600 rand there. It could be a function of the relative illiquidity, so him not being able to pick up big blocks of stock in order to purchase, but buying stock by insiders is generally regarded as a positive signal, as a signal of confidence in the story of the company. But yeah, I don't have much detail on the company itself.
All right, and then Rowan, how are you playing the iron ore market? The viewer here asking if you'd buy Kumba or Afrimat.
Yeah, so it certainly is an interesting space, and we have seen quite a lot of weaknesses in those two counters. Kumba in particular is one of the few global pure play iron ore producers, and on our sort of valuation metrics, the shares also cum dividend. It's trading very low and quite a big discount to sort of physical spot iron ore. So it does seem the market remains quite concerned about the outlook for iron ore prices, and I guess the expected demand, partly off, I guess, tariff disruption and a potential slowdown in China. But from our perspective, that's more than reflected in the price here. So it actually does look quite interesting for us, Kumba. Okay. But Afrimat as well. Afrimat has been very disappointing. I see MSCI rebalance numbers came out, and as a result of the share price underperformance, it's actually going to fall out of some indices. So there could be some more short-term share price pressure there, but it does look like quite an interesting entry point. I think they've been doing a lot. They also diversified beyond iron ore, obviously, with their cement operations that they're turning around. So I think it's at sort of multi-year lows. It's quite an interesting entry point. I mean, you're all making a call on iron ore, but it does look like the market is settling in terms of iron ore prices. So both of them are actually looking interesting here.
And what about you, Chantal? I know you really do like Afrimat. What about Kumba?
Yes, I mean, I really like Afrimat. I think that the entry point right now is extremely attractive. They kitchen sink their results in Feb or their Feb results, and I think it's just going to go better from here. It couldn't possibly go worse, touch wood. But Kumba Iron Ore is also an interesting one at the moment. I mean, this company is very high quality when we look at like single commodity producers. Generally, I don't like single commodity producers because you're so exposed to that commodity price as well as exchange rates. But Kumba has actually made an economic profit. That means that their return on invested capital has exceeded their weighted average cost of capital, even like through the cycle at the lowest point of iron ore prices, which means that this is a company that you can actually trust through the cycle and that you can own longer term. And if you look at longer term returns, say you look at the last 10 years, you've made a really decent per annum kind of return on Kumba because they pay out a hefty dividends. So yeah, I like both of them, and I think Kumba Iron Ore is very interesting at the moment.
All right, let's get
like Rowan.
Okay, dokes. Let's get your stock picks. Rowan, where are you seeing opportunity at the moment?
Yeah, so we mentioned a little bit earlier in the show, RCL Foods. It is one of the companies that was unbundled out of the Remgro stable, and also it was split from Rainbow. Rainbow Foods is the chicken business, which is sort of commodity and quite cyclical. RCL Foods does have a commodity element in the form of the sugar interest, but it also importantly has a groceries business. And they recently came with a trading update. The numbers look particularly good, sort of heads up around 15%. So it's trading on a historic P of about 6 times. We expect it to pay a good dividend, which will give it a good dividend yield. And I think the prospects are good for the overall portfolio in terms of earnings growth. We have seen the food manufacturers being fairly defensive and actually doing quite well. So I think the stock is a little bit sort of forgotten because it was partly unbundled out of Remgro, and it's just I think a good quality business at a very reasonable price. So this is a nice time to pick up stock when it's likely to declare a dividend in the short term as well. So a nice cheap entry point to a quality operation.
And what about you, Chantal? Where are you seeing opportunity?
I'm looking at the kind of small mid-cap space. It used to be a mid-cap. It's now a small cap, Met-Air. So Met-Air put out a trading statement yesterday that was really, really solid. Not only did they guide for a really nice rebound to profitability, but one of the big key issues for them has been that the perception that they are supplying into the motor vehicle manufacturing industry into South Africa. That's their biggest client. Their biggest client actually is Toyota South Africa. But they indicated very clearly in that statement that none of their OEMs actually export to the US. So they are not directly impacted by tariffs, but I think that the market is discounting them being very much impacted by tariffs. Added to that, the balance sheet has been a bit of a pressure point for them, but importantly, they've restructured their debt, and they haven't breached any covenants in the last 6 months, which I think is great to the extent that they've actually been struggling over the last few years. AutoZone, I think, is a very interesting acquisition. They're bedding that down nicely. They expect it to start being earnings accretive next year, which I think will be a great sweetener for them. And they've restructured some of their more complicated businesses and JVs. So it's a cleaner operation, and I think a lot of the risk out of it now. Trading on a forward PE of 2.6 times. I think it's a steal. And if it's a steal to investors, it could be a steal to an outside investor, perhaps looking to take it over as well.
So Mete and RCL Foods ones to look out for. Thanks so much for your time and sharing your insights today. Now that was Chantal Marx from FNB Wealth and Investments and Rowan Williams from Nitrogen Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right on Business Day TV.